Greetings from a very warm Cape Town this evening, the second day of the mining in Durban. It's been a very, very interesting day. We've had Susan Shabangu, the South African mining minister, saying there's going to be no nationalisation. Also, we've had the former Anglo CEO, Cynthia Carroll, saying that there needs to be an end to the anarchy in the business. Now, that's after all the wildcat strikes last year. Two words which have come up a lot today: sustainability and risk. And with me I have Jon Duncan, a man who knows a lot about both. He advises the team of analysts who invest in mining inside Old Mutual. Jon, welcome. And what are you exactly, in this, after a terrible year, a very difficult year for mining, have you been advising your analysts to invest in mining here?
Well, we try to keep an idea on, or keep a close eye on some of the longer term risks, particularly some of the longer term social and sustainability risks. We try to keep a close eye on some of the changing legislative risks. And then on the environmental side, we also try to keep a close eye on some of the emerging risks, perhaps that are of a carbon tax nature, perhaps water scarcity nature. So that's a broad field for some of the issues that we're advising our analysts on.
Now, this word sustainability, it's thrown around a lot. I mean, surely, doesn't it mean just making sure that long-term investments work? I mean, is there a mystery to it, as it seems to be when people talk about it?
Well, from a capital allocator perspective, long-term allocators of capital need to think about the long term, particularly pension funds. Obviously, they have liabilities that set out into the future. So the question becomes, what will the quality of the future be like as a result of the investments that are made now? So sustainability from that perspective is very much looks at some of the, how do you price these long-term risks into your current discounted cash flow analysis today?
I mean, how concerned should investors in mining be? We're talking about a new resource tax here, we're talking about windfall taxes. It's all in black and white, it's going to be in the future. Can companies plan for these sort of things going ahead?
I think it's important for there to be certainty from a policy perspective. My sense is what we're seeing in South Africa is an important conversation that's emerging, that's starting to really give an underpin to just how important mining is to South Africa from a job creation, a tax perspective, and from a general sort of economic well-being perspective. And I think as the two parties start to find each other, we'll start to have a little bit more policy certainty.
Where do you think mining is getting it wrong?
I think my personal experience so far is that what I'm seeing is a lot of mines sort of focus on getting their projects through the gate, but often what happens is they sometimes fail to deliver on some of the sort of longer term issues around social and labor development plans, etc. So that's perhaps an issue going forward this year that we'll be looking quite closely at in terms of the quality of delivery on social and labor.
And finally, very briefly, what sort of red flags will you be looking for in 2013?
Look, one of the key issues for us that we'll be focusing on is, as I mentioned, social and labor development plans. We'll also be looking quite closely at remuneration structures. We're particularly keen to understand company strategy, executive pay, and how that translates into day-to-day action at the company level.